On the eve of flattening curve, the market rallied yesterday and it rallied this morning, but it sold off. It sold off from the highs throughout the day. Particularly in the last 30 minutes or so, we saw some pretty aggressive selling off. What is this? What does this mean? Are we going to go on another dip right now? What's going on here? The volatility is obviously remaining. Yesterday, we were up 7.5%. I said that was a little too aggressive of a rally. It's a little too much volatility, a little too much up on what might have been possibly, probably picking up steam. So a little too much action, a lot of action this morning, continuing on top of that level of action. And then the bulls kind of ran out of steam. And the bears, I don't know if there's necessarily bearish sentiment, but they started taking over once the bulls kind of ran out. So what this seems like to me is some good news came, and we needed this good news because this is like fundamental, right? This is fundamental to everything. This tells us, all right, we've possibly hit the peak in terms of the actual virus concerns, and that's what we need is to hit the peak in terms of the actual virus concerns because the market is forward-looking. It wants to see into the future. But there's still unknowns. There are a lot of unknowns surrounding the economy. Mortgage payments are apparently getting held up. 2,000% increase in people applying for like a federal loan mortgage forgiveness program. I've never had a mortgage, so I'm no expert on this program, but I can understand that when 2,000% more people apply for that program than normal, that says something about how mortgage payments are kind of shaken up. And that has a slight domino effect. A lot of old people and just people in general own these mortgages and rely on that income for life. So they're going to have issues with that. It's a problem for some people and it's some sort of effect on the whole economy. So hopefully that won't materialize too much. But, it was kind of healthy to see a little bit of a sell-off towards the end of the day. We had a very aggressive rally off of what was news that had to come at some point, and that came. That was not world-changing, not breathtaking news. It was the beginning of the flattening of the curve. We knew that was going to come, and it was good to see it a little earlier than expected. And the market was warranted in rallying, but it rallied a little too hard. And, in the long term, we're going to get way past the point that we're at now. But we got to just understand that a little sell-off is normal. And it's going to maybe continue into tomorrow. And it's not a fundamental sell-off. We're not going into a bear market again. We're not going to do a huge downturn. It's the market saying, hold on, fellas, hold on. Still got economic uncertainty. We don't know what the downward side of the curve looks like yet fully. We just know it's approaching that to an extent. It might be a plateau. It might come down as quickly as it came up. We don't know. So we need that to materialize. And then are we sticking to the April 30th deadline? Hopefully we are. Looks like we're sticking to that. That's kind of the day that the economy is factoring in that we're going to turn on, get back to work, get back to shopping, get back to getting on flights, get back to just overall economy in America stuff, not being cooped up in the house. So hopefully all that stays on track. If it does, we can expect to not get back to the bottom, and I fully expect that to be the case. That's where I'm betting my money. I was nibbling a little bit in the morning today, nibbling a little harder in the afternoon. I'm probably going to nibble a little harder tomorrow. So that's kind of what I'm thinking. I'm glad to see a little bit of this sell-off. I think it's healthy for the market to see this sell-off. The fact the flattening of the yield curve, or the flattening of the new case curve is happening is a good thing, and the market should rally on that. And it seems to me like the economic damage has been factored in. The virus damage has been factored in. And now we're kind of getting to the point where the good prices are around, but they're not going to be around that much longer. So we kind of got to start taking advantage of them. Now, I always think it's a good idea to have some cash on the sidelines. Opportunities are going to present themselves. November 20th, I sent that text out about Virgin Galactic. It was a good idea to have cash for that. So keep a little bit of cash. I'm not saying it's impossible to see a second wave. I just think it's highly unlikely. So it's time to start putting that cash to work. we might be selling off tomorrow. We might be selling off Thursday. Good days to be buying. Good days to be buying. So if you bought today, don't panic sell. Don't panic anything. Don't panic anything. Be controlled. Realize that the next couple of weeks to couple of months are going to be a recovery period. But we've had damage. We've kind of just had damage. You just got to acknowledge that. So we're not going to shoot up all the way back to where we were. That said, we are going to have very solid tailwinds coming out of this. A lot of stimulus packages are going on. So we're going to have a lot of, economic stimulus. A lot of businesses that are being hurt, but loans are going to be forgiven. If they're using those loans for payroll, which means it's getting back into some consumers' pockets as well, those business loans are going to be forgiven. It's obviously this $1,000 check, which I don't think is going to have a huge effect, but it's there. So there's a lot of stimulus. Apparently some sort of possible infrastructure program is going to be going on. That's going to be good for a lot of companies, a lot of construction companies, a lot of construction workers, a lot of new jobs that hopefully will be layered on top of the jobs that have been lost, which will hopefully be rehired once the economy turns on. But the catch-22, the catch that I'm trying to hammer home here is there are some economic unknowns, and we just need to acknowledge that. Doesn't mean the market shouldn't rally. Doesn't mean you shouldn't buy. But the 7.5% yesterday was a little too aggressive. The 3-4%, whatever it was early this morning, a little too aggressive. The pullback, the losing steam a little bit that we saw towards the end of the day that may or may not continue into tomorrow, also equally as warranted. So with that in mind, happy investing. Peace.